Well, let's look at Nigeria's property market. Now, see, Nigeria's real estate market is entering a new phase as fresh data from the 2025 Real Estate Capital Trends Report reveals a major turnaround in transaction activity, a surge in brownfield redevelopment and rising interest from both local and international investors after a record fivefold jump in acquisition volumes. Growing foreign reserves, easing inflation, and a more stable currency. The report shows how these shifts are repositioning the sector as one of the most influential contributors to GDP. So pack the data now with Dolapo Omidire, the founder and research director, Estate Intel. Great to have you on the show. Good morning.
Hi, good morning, Ladi. Thanks for having me.
Fantastic. So see, the report shows acquisition volumes, that's rising from about $53 million to $336 million in 2024, a fivefold jump. What do you say is driving this surge in activity in the real estate market here?
Yeah, between 2023 and 2024, we saw a massive, 4 to 5x jump in transaction activity. In the report, we document that the main driver was owner-occupiers deciding to buy their own office buildings, and some income funds also deciding to acquire existing office assets. So office activity, hospitality activity, or investments in those sectors are what we've been seeing, or what we saw majorly drive the transaction activity between 2023 and 2024.
All right, so what's this data really telling us at this point? We know the real estate market, depending on where you're coming from, if you're renter, definitely you're under pressure, trying to find the right property at this time. Round it up for us. What's this data telling us?
I mean, yeah, like you said, if we're looking at it from different perspectives, the story will be different. If we're looking at it from the residential side, taking away all this capital market trend activity, rental pressure is, through the roof, especially residential. The unfortunate part is even if the landlords increase the rent and the existing tenant can't pay, somebody else in the market out there is going to be able to pay that new rent. So it's putting a lot of pressure on residential occupiers. On the commercial space, when we talk about office and retail, in office, the market has been largely stable. Most buildings have been growing in occupancy. And most buildings have been growing in occupancy, and what we're seeing is that stability is translating to the acquisitions. So some of the stable assets have been acquired, and some office occupiers, instead of renting buildings, they're just saying, you know what, it's probably smarter for me to buy an existing asset. Or if they wanted to build, they're saying, yeah, you know what, let's just acquire something instead of taking the construction and development risk. So that's sort of what has been happening and what we're seeing.
Right, and talking about construction risk now. So we've had FX stabilizing around 1,422 per dollar, reserves hitting new highs, inflation that's easing. So how much of real estate this renewed momentum how much of that is tied to Nigeria's improving macro environment in your opinion?
It's a strong relationship. With most things commercial real estate, when you're operating at that grade A office, retail, hospitality level, it's very, very linked to FX, because most of the construction inputs for those types of projects are going to be imported. So when there is some stability, it really does, even if it doesn't immediately create some recovery, it creates a sense of stability and an ability to plan for a lot of the developers who are building or the people who want to build.
So, we're seeing the sector now contribute about 13.3% to GDP. That's real estate services, now contributing about 13.3%, making it the third largest sector. What does this tell us about, the resilience, of this sector?
I mean, if we look historically, the real estate sector has sort of trailed. It's not been a lagging sector. If we check prior to last year, to 2024, it's usually fifth place, maybe sixth place in some quarters. In some quarters in the year, it's usually more active because there's a lot of construction development activity, and in others, it sort of tapers off. But what we see or what we saw at the end of last year for 2024, and even in Q1 in 2025, was that it is now not a frequent or semi-partial big player. It is definitely a big three sector, which is what we've been saying in the reports that we're discussing to clients about, and in this capital trends report. So, I mean, when we're, like I mentioned, with the commercial real estate market, this economic stability, it really trails into the investment, because if you're seeing a lot of projects now that are maybe topping out, that are in active construction, it's not today that those decisions were made. So what we're going to be seeing now is that in the early stage, that the economy is going to lead to a lot of early stage projects that are going to start, development starts, people deciding, okay, let's go out, let's hit the ground, let's start building, let's start buying, let's start renovating. And then maybe in the next 2-3 years, we'll start seeing some completions in the years ahead.
Right. Now, we see the report suggests that, Lagos office and retail markets are, heading into recovery. Are we looking at the lowest entry prices of this real estate cycle?
Yes. Yeah, you've quoted it bang on. What we're expecting is that if we do proceed or we continue with the current economic stability narrative and the current the look and feel of the market at the moment, we're expecting that moving forward, prices are going to appreciate. With the other non-niche sectors like data centers, industrial, and on the other side, resi, those have been in expansion since COVID. They've been on the bull run since COVID. But office, retail, and hospitality entered some level of hyper supply and then eventually recession. But now we're starting to see that bottom out. We're not seeing prices significantly fall. The only sector that is still lagging a bit is the retail sector. So with office and hospitality specifically, we're seeing that in the next 1 year, 2 years, if things remain stable, with some of the regional stuff going on in ECOWAS, what's happening in the US and interference in Nigeria, I'm not sure how that can affect. But if we do maintain the overall positive narrative of, okay, reforms are happening, growth is happening, that should really bode well for the office and hospitality sector specifically. So we should start to see that prices will rise. So as you mentioned, right now might be potentially the best time to enter if you're looking to acquire, if you're looking to participate in the secondary market.
Definitely, I know you keep your eyes on what's playing out in Nigeria's real estate market, Lagos, Abuja. What other interesting trends did you notice in 2025?
In 2025, or I'll say in 2025 and 2024, we saw quite a lot of institutional investors start looking at Abuja again. This isn't documented in this report, but as you mentioned, just a general trend. We've seen quite a lot of people with conceptual projects that have been on paper just design stage for 5 years. They're starting to come back and ask questions and say, okay, you know what? Can we revisit this? Let's do some market research. Let's revalidate this opportunity. There are some things going on in Abuja, but I think the fact that we're seeing institutional investors sort of return to that market is indicative of the overall growth that we can expect. The last time we saw this type of interest in Abuja from big institutional investors was back in 2014-15, when the first round of retail and commercial investors came to Nigeria from South Africa, all the PE funds. So it's a good signal. Not all of it is materializing yet. Abuja can be politically risky as well with those who are approving and doing all of that. But it's a good sign to see that the growth is going beyond Lagos, and hopefully it does translate into some brick and mortar construction or acquisitions in the year ahead.
Right, and you did mention some businesses instead of building from scratch because of construction risk, they buy existing buildings and they do it up. But is that also playing out for residential estates? Because I'm also noticing in estates like in Adeni Jones area, see some old buildings, they have to bring it down and put up some smaller modern houses. At this point, it seems like that's a trend that's catching on at this time. But you still have to bring the property down, I guess. So that's still a lot of cost.
Yeah, I think I can break it down into two sectors. So with the commercial real estate space, which is what we documented in the report, the main driver is building costs. So replacement cost for a grade A or grade B office building right now is through the roof. So it might make more sense to buy an abandoned property and redevelop it, or buy a property that is nearing completion and just decide to occupy it, as opposed to taking the construction risk. And we've seen those types of refurbishments and renovations happen at a much faster pace over the past 5 years. I think between 2009 and 2015, there were just a handful of projects, but between 2016 to date, since inflation started rising, it's through the roof. If we're looking on the residential side and the example you gave, I think there's a dynamic to that. On the mainland, land is a lot more scarce. So most likely, if you're looking to develop a new property, even if it's in the residential space, or especially if it's in the residential space, you're most likely going to have to buy an existing land parcel that has a property on it, maybe buy 2 or 3, knock them together, bring the building down, and develop a brand new property. It's just, yeah, you find that more likely happening on the mainland, where it's already been developed over the past few decades, than in Lekki Phase 1 or in Shombutedu, where there is excess land available for development. So I guess those are the dynamics that I can see in that.
Right, and definitely talking about the mortgage market now for residential properties, people trying to own houses, at this point, we're seeing some moves by the government, to, get the mortgage market working. What are you seeing, from your end? Are you seeing, Nigerians actually benefiting, from this renewed vigor we're seeing in the mortgage part of the market in Nigeria?
100%. I think that the MOFI project, or the MOFI MREEF, that is being managed by ARM, is a really good initiative. That's the pioneer one that's ongoing, that is giving Nigerians access to up to 100 million naira at about 9.75%. It's a really good initiative, and I know a bunch of people who are either in the process of trying to apply or who have already applied. Now, I think what just needs to be done is more education, because every now and then, I'm in real estate, so I find myself just saying, oh, know that you can get up to 100 million with this project, and not enough people know. So I think it's a good project, but we just need to do a lot more education. We need to get the word out, because people when you explain it, it sounds too good to be true. So some people are even skeptical. So it's a really good initiative. I think we just need to do some more market knowledge and education to make sure everybody understands and is aware that this opportunity is actually available. But yeah, it's a really good initiative, and it will have a positive impact. Okay.
Yeah, because when you cast your mind back to when the naira was still maybe about 300, to the dollar. We know the prices of properties, back then, but now you need so much naira, to get a property. Right now, hopefully we get more strength for the currency, so we don't need to get, because I remember there was a time you could get, a detached house in maybe Chevron for about 50 million. That's not the case now. The properties are really, really expensive, and that's due to the weakness, of Naira. But we'll keep, tracking the market to see how Nigerians can afford more properties. Thank you so much. It was great having this conversation with you. Dolapo Omidire is the founder and research director, Estate Intel. Thank you for coming on today.
Thanks, Ali.